What is going on, everybody, and welcome to another weekly technical video where I go through all the stocks that I am looking at for the week, give you some entries and exits, and then also dive into weekly analysis, which is my previous video that I typically do on Saturdays. And I do also provide a daily market pulse on X at Hemi137. So check me out there as well. So, while we go ahead and get kicked off here, let's take a look now to kind of preface these technicals. This is why my analysis is, or my essentially overall market thesis and scheduled events is important because it gives you insight into why these moves are actually occurring. Again, there's always going to be X, Y, and Z, but understand how that could potentially play out in different scenarios. And it also changes the theme of a lot of different things that are currently playing out. So, as of right now, we had essentially the yen carry trade, which has kind of dipped us down even further. We had a nice bounce kind of off the 200 over the past week. Big question is this is something I say with technicals all the time. When you get a major break like this against a major support, you'll essentially have a retracement back to what is now resistance from that major support, and then you'll get a hard rejection off of that. So this week is going to be important to see if we can hold that 5,100 level. Now, this is new fear. The weekend is just starting, and we're going to have to see how the weekend finishes out and how Monday morning opens. Again, there's been a lot of big news carrying over from the weekends into the week. Now, we've gotten out of essentially the big earnings, Super Bowl week of earnings about a week ago. So now we're kind of more so looking at some of these smaller earnings that are important because they kind of allow us to see where essentially the consumer is at, engage where the consumer is at. So that's what we're kind of going through as of right now. But we do have Jackson Hole coming up at the end of the month, and that's going to be extremely important, especially on technical wise where we can land here. So Monday's going to be important on how we land. Maybe we gap up back over this. We're doing a lot of treasury buybacks. Although it's not going just to provide liquidity, although I don't think that's going to, they've been propping up the market quite a bit. So we're going to have to see how well that does. And then now that NVIDIA, essentially their new chip has been delayed, that could cause a lot of problems and a lot of weakness in this particular earnings. And then understand October is normally a typically bad month in the cycle too, as well, as far as selling off. So we're going to have to see how this does finish out. And then also a price in a recession, which we haven't done yet. So we're going to have to see how that all plays out. Nonetheless, we're looking for a retracement back to the 5,400. If, again, that gets rejected there, that's going to be a key point coming into this week. If it does get rejected there, looking to aim back to the 5,100 level, depending on if there's news and momentum, we're going to need some momentum to break back down below this. Which could be a very strong possibility because you have some new fear with the carry trade. Now, if you get any other news that could cause fear, this thing could break. But again, not expecting anything from the Fed, so we'll see what happens here. But ultimately, that 5,100 level will be key, as well as that 5,400 level this week. Again, these are daily, so I wouldn't be surprised. Maybe Monday we do open up slightly above and try to retest it. If we can't get any momentum to the upside, this thing could roll over and start attempting to hit that 5,100 level. Maybe we just continue to chop. The market isn't very strong right now. I haven't had fantastic earnings. A lot of forward guidance is not great either. So you need momentum. It's designed to go up, but as of right now, there's new fear. So again, we're going to have to see that go, especially with a lot of uncertainty going into this election. You definitely want to be very careful coming in. So again, those two very key levels coming into this week. Let's zoom out a little bit here because this is going to be really important. As we did break. We can see this on the higher time frames very clear too that we are retesting this level at the 5,300 level. This is for the week. So if we finish back down below that, that is not a good sign. Your next major support is going to be around that 49.60 mark. Break that. You do got some speed bumps roughly around here. Pretty solid support roughly around the 47. Ultimately, you have to realize that that 4,100 level is a really, really important level. This was the low of October, just of last year, and understand that that is really what we're looking for. This is where we paused. It's good to know where we paused. It's where we officially paused of October of last year. And then yeah, that's right, because this is 2023. So this was October of 22 is essentially that bottom that we thought we would reattempt here in October of last year, but we paused. That's allowed us to, which is normal. We essentially get that normal push up on a pause. And then now we're talking about recession and rate cuts. And we're not talking about little rate cuts. We're talking about 50, 100 point, 150 point basis move. That's pricing in a recession. I've talked about this. You start looking at at least a 42% correction. That's just the average. I'm not saying it will happen. A lot of things are heavily weighing that very well could happen. And if that's the case, you're looking at that 30, roughly around that 3,200 level from the peak here. So again, we're going to have to see how this plays out. It could get really nasty. It could be just a flash crash. Could take multiple months. Again, if you want this thing to last multiple months, you're going to have a lot of momentum. There has to be a big event, and it almost seems like the way everything's are going that it will only be a big event that will occur. And I think whoever sits in office in February, there will be a big event around that, and that will force essentially the market to crash or correct at that point, and they'll blame it on that event as opposed to actually the debt-based system. So with that being said, again, very key levels here to watch. So again, here, this is when we paused around the 4,100 level, and this is again the lowest point from essentially coming off of the pandemic and the printing of all that money. So that's your low point, that 3,500. Again, it was very briefly that this happened, and then you saw this was a massive move in one day right after a Powell meeting. And then we started making our way up, as you can see here. Like I said, this pause here saved the market from going to new lows and has pushed us up to this point. So we'll watch and see. But again, that is the weekly, so do keep that in mind. I'll drop this back down to the daily. Want to go check out some Bitcoin. Now, Bitcoin's been fluctuating all over the place, especially with everything going on. Something I talk about when there is major issues in the market in general. Bitcoin, everything, gold, everything's going to sell, right? Because there's massive fear in the market. So it doesn't matter what market you're in, it will sell. Economics play a big part in everything, any kind of market that you're in. So you need to keep that in mind. Again, now we've dropped down to the second range here. We're starting to consolidate. It's going to be important to break back above that 6,300 level. I think if the market starts pricing in a recession, I think we could potentially see a 35. A dive down to 35 before we correct to new all-time highs. Again, it's about 6 to 7 months from halving when you get your full bull market for crypto. So again, I think that would kind of run in line if we can price in a recession before then. You're looking at in the new year, March of the new year. Hopefully we price in a recession, buy it before that time or around that time, and then we can get in a pretty massive bull market. Now, again, it's not going to say it's just going to V-line straight up. If the money printers have to turn back on, it's going to eventually be the same song and dance that always happens. And you're going to get a massive correction, and then the market's going to have to, essentially the U.S. government's going to have to do something to try to save it. So they'll turn on the money printers. Hopefully they didn't destroy the consumer at that point. This is why they've been pushing hardcore for rate cuts. But again, the Fed is very concerned about inflation, even though inflation is defeated. So imagine that. So we'll see what happens here. But again, I'm more guessing it could get a brief stent down to the 35, or at least come down to the 47, just below 50, which we did here when we had the scare on Monday. It dropped below 50 very briefly and then caught back up. So again, this has been a pretty strong resistance right here. Now, and it seems like we're being held down on that. But again, I wouldn't be surprised. Again, your low is 25 here, so hitting just 35 isn't that big of a deal. I think in the higher time frames, it's as long as it's still above the 25, it's still very bullish in my opinion for crypto. And then moving forward, I think it will be as well. So let's take a quick look at gold. Gold's been had a massive drop, like I said, and it's just been consolidating. Again, gold will run up before any major event. Once the event happens, it will start selling off. So you have to keep that in mind. Bonds start cutting. You're going to really want to start potentially looking at bond plays. So we'll see what happens there. I think that will be the best trade for any kind of recession is the bond plays. but you have to wait for the timing. That's all really going to depend on timing. So just keep that in mind. So gold continue to fluctuate between the 229 and the 220. So if you want it to go lower, it needs to break this 220 mark. We'll see how that does. If not, we're gonna have to break that 230. But it's still, even this was a heavy support at the 200, and it still hasn't even broke or came back and retested that. So that will be important to watch, is that 200 level moving forward. Let's take a look at TLT real quick. Again, try to break out here. That $100 mark has been rough for TLT, but it is making a higher low here, but it's actually starting to wedge, which doesn't look very good, to be honest. So they're going to have to cut rates again. When they start cutting rates, we don't know when exactly it's going to be. Again, they said they're trying to schedule it for September. I think more so they're waiting for a bigger event with banks to occur before that actually happens. So we'll have to see how that actually plays out. But we shall see. So we're kind of getting a funky wedge here. We'll see how this does play out. Looks kind of like an ascending wedge. May just be building up. But one thing is for certain is it does look like there's going to be a massive move to the upside once they start cutting. And I think we're very close to that. A lot of these have been warnings that we were close to cutting, but we haven't done so just yet. So they've been pulling other strings that they can, so to try to keep this market propped up. Tesla still, I think it looks like we have a bear flag here on essentially the daily. Looking for this thing to try to retest back down here at the 165. I still am really bullish on Tesla. My only concern with Tesla is Elon and his particular situation with Twitter and everything going on with politics. Could be a concern for Tesla to sell off. Maybe not just Tesla, but the fact that it has Elon's name associated with it could be a problem for Tesla. So you do have to keep that in mind. But yeah, as of right now, could be bear flag here. So I'm kind of expecting this to at least drop to 165. Could even break down lower and then jump back up, kind of like it did here on earnings when essentially Elon started talking about FSD, and you had a massive rip and consolidation. I think Tesla, it may be just retesting this in the higher time frames. As long as this could try to reclaim over the 220 again. Before the end of the month, I think this thing has a chance to just be a retest of this massive wedge that we got going on here. So I'll be watching that very closely. Otherwise, it could just remain and chop in here until we get rate cuts. Again, if we start pressing a recession, I really want to see what the price action looks on Tesla moving forward, but I really like it so far. Still supported. I think this really saved it here. Again, the lowest point being from October of 2022 was around that $100 mark. And again, it was there for very, very brief period. Let's take a look at Palantir. Palantir, obviously it crushed earnings. It's still in this tight channel. I want to see how well it does. It's hit 30. I think 30 might be the new high. I think it made a new all-time high, but it's been doing extremely well. 45 was, so 45 briefly there. So kind of watching is trying to reclaim all this. We'll see what happens. I think at some point it's going to break this channel. I thought maybe that would have been the time, but the fact that we had earnings. But again, I think this is going to be short-lived only because pricing in a recession. I don't know how far we're going to go. Seems like a really strong support around the 15. Maybe that's about as low as we go. I don't think you're going to see this level here around the $10 mark anymore. I could be wrong. I don't know how bad that price in a recession in Palantir is going to last, but considering this is one of the best, again, AI stocks, I think right now you could get a little bit more room up to the 32, and then we're going to come back down. Maybe it breaks out. I think at this point, the market just in general is very weak. You might get a couple extended days here because it did so well. But we'll see if it starts selling back off just along with the market. And that's not because of the company itself. That's just general market sentiment. And then Amazon reclaiming is trying to retest roughly this 174 mark. We'll see if it gets rejected just like the market and starts selling off to the 145 mark. Expecting it probably at most. I don't know if we're going to see the October lows of 22, but could potentially see around the 120 mark. Pricing in a recession, I think, where we can see it at again. I don't know. Depending on how that we accelerate, will really matter. But you do have support here, roughly around the 160 and the 145. So we're really watching those levels. I'd really like it down here at the 125 mark, but we'll see. Again, anything below that I think is definitely worth a buy, in my opinion, but we'll see there. Shopify had earnings this week. He did very well. Again, I thought it was going to really sell off, but because of the earnings, again, it pushed it right back in, just like Tesla. So we'll have to see if it can break out, maybe reattempt all-time highs here at the 90, or not all-time highs, but at least the 9 retraces back to the 90 mark. Could be a possibility. Once shop really starts getting momentum, it moves very rapidly upwards or downwards very quickly. So do keep that in mind. But it, again, doing very well. And then again, really watching this level, the $60 mark. If we fall back below that, that can be very concerning. Again, it is still a lower high. So again, if we lose momentum here, it's going to really matter. So you want this thing, at least you really want it back above the 92 mark, but we'll see if we can reclaim that. I think that's going to be a very big struggle if we can't. If we can't, this thing is just probably going to roll over and start selling off again. So watching Shopify, PayPal, again, did really great on earnings. This has really been, there's been a lot of consolidation in here, which makes me believe this is really going to rip out of here. So really watching the $58 level. If it comes back down, that's a good buy zone, and then even deeper, heavier buys here at the 50. Again, they're doing buybacks as well, so they got tons of money for buybacks. This is why it's been consolidating nicely around the 58 mark. So really great support there, and then we'll continue to see how this does play out, but I like that one as well for the future. Take a quick look at Apple, trying to hit some of the Mag 7 here. Again, looks just like the market. We are retesting that 218 mark here. Have a brief speed bump here at the 206, major support here at the 200. So if it breaks this, I think we're going to drop all the way down to the 169. You do have some speed bumps for support here, so it's not going to be just a straight drop. When I mention these things, you have to, again, remember, I'm on the daily, so I'm kind of looking at this weekly and monthly that I'll eventually get down to that point. But I think the support's around your 165. I think the low for the October of 22 was 150, I believe. I gotta love October 22. So the low was here around the 130 mark. Again, historical buybacks is really what's been holding this up. So that's what's really concerning. And you can see this better on the higher time frames. You got major support here around the 193, and then the second major support around the 169, and then kind of breaks pretty strong support at the 153. But again, ultimately, your big support is that 130. So really kind of watching that. Let's take a look at NVIDIA. This thing has been an absolute behemoth over the past couple of months, but it's losing momentum, and I think it's losing momentum, especially with the chip play. So that's what's really concerning here. He has some strong support here at the 90, so that's a key level to be watching. Your next big support is at the 75. It breaks that. You can potentially fall all the way down to 45. Ideally, that's where I would like NVIDIA at right now. You have to understand that NVIDIA consolidates for many, many years before it has massive moves, kind of like Tesla, but much more overextended. So just keep that in mind. But especially with the chips being delayed, that could be some bad news. So if that bad news continues, this 88 level will be really important to watch and see if it sinks below that. Again, we don't know if the speed bump is going to hold it up enough, or if this thing's going to sell back down. So, and NVIDIA is kind of that cornerstone, like I said, that if it doesn't hold up, that's going to be a very, very big problem moving forward. So let's take a quick look at Meta. Meta has been just kind of consolidating roughly between the 521 and roughly this 414. Again, this thing really starts correcting. Lowest point being just under $100. It's gone completely vertical. I think if this corrects, it could at least get down to the 300 mark. If we go any lower than that, I think the market will really have to be hit pretty hard. But again, it's right now it's doing extremely well, so we'll see what happens there. And then SoFi, again, let me drop this down to the daily. SoFi looks primed and ready. Again, my only concern with SoFi is I like this wedge. You get the break and the retest. It does look like another bear flag, but if you're going off of this technical, we could potentially start rise at least 75%. You're looking roughly around $9 potentially, but again, it's also a bear flag. A lot of these weren't playing out for a very long time, especially in 22. These wedges weren't playing out very well, especially to the upside. At the downside, they played out almost perfectly, but the upside they did not. So, but right now, there's a pretty strong support here around the 640 mark. If it can hold that, I think we could potentially see close to a $10 run here. But again, you press in a recession, financials are going to get really hard, and so that's what the concern is with SoFi moving forward. But so we'll continue to watch that one. Let's take a look at BA. Of course, again, massive consolidation playing this range between 200 and 165. Again, if this breaks, that's going to be a concern because you got a speed bump here roughly around 140, but you're looking at the 120 mark really. So that could be concerning. The fact it's consolidating much lower, it was consolidating at these higher ranges for a long time. So now that it's much lower, is very concerning. Again, still a lot of worry, concern about the planes and potential takeover from the government, which I don't think is really going to officially happen, but or provide oversight for the company. So we'll see what happens there, but I'll have to go from there. Walmart will be important to watch. I don't know if we really want to go over this, but their sales are going to be important because that is what's propping up a lot of the value plays is Walmart because of groceries and people binging on groceries because of the current market. So, but again, very strong moving forward. If this does at all start selling off and backfill, a very strong support here at the 60 would definitely be a great entry if you could get Walmart. Target, on the other hand, not so much. It's again has a lot of just retail merchandise that's just not selling well right now. So, and they're trying to focus more and shift more onto the grocery side of the house. So we'll see how they do on this earnings, but not a great of a buy as per se as like Walmart. You got JP Morgan. This thing finally broke this wedge. So this is again very key, just like everything else I've been pointing out. You see a lot of the same common patterns in the index in essentially Nvidia is now you got to break this trend. So it'd be important if JP Morgan can hold the 205. If it breaks and starts turning over, that could be highly concerning. Now, this thing only prices in about 5 points, so it doesn't just drop out of thin air. But I mean, it's always a possibility, just like it could just pop up for no reason as well. So, given whatever news may be occurring, but technical wise, this looks like it's getting ready to turn over and start dumping. So we'll really start to see if that's the case. So that 205 will be really important this week. To see if JPM can reclaim that. Otherwise, we can attempt the 190 again. If that does break, you're kind of looking at the 180 mark and then potentially even down to the 169 mark there. So, and then I think that is pretty much it. I don't want to make this video too long, especially with technicals. We can go over all these technicals, but ultimately right now, a lot of them look the same, like I just pointed out. So we want some of this to play out. I think Jackson Hole is going to be a big event. That will maybe give us an idea of when cuts, if we don't cut by then, will be maybe even emergency rate cuts. We're going to have to see that. A first initial rate cut, I think, will be an emergency. And then after that point, they're just going to schedule it. But again, we need a bigger event for that to occur. So again, we'll see what happens. But right now, a lot of things, again, are very, very overextended. We need some correction. And you have to be patient for the corrections, especially in a market like this where there's a lot of uncertainty. All it takes is one big event, and then the market's going to sell off really heavily very quickly because it has some built-in fear already. So we'll see how that does play out. But with that being said, go ahead and drop a like. And I appreciate you, and I'll see you guys on the next one.